into the bottom edges, and then the value shifted. And so all of a sudden, after being long into the bottom edges, with this divergent value, the short-term value started to bubble on the sell side. Now, that's not enough to take you off your buy trade, but it is when it actually breaks to a brand new low price, when you know that everybody's long. So when I see that, I know this is going to be a brutal sweep sell side. It's not just going to pop sell side. How do I know that? How do I know that with 100% certainty, Simon? Because if the value is bullish, everybody in the world is long into this here. Because that's what everybody's doing. The swap dealers who make up the vast majority of the volume are going to be long in those areas. So when the value comes off of their long position, they've got to come off their long position. So that means there's going to be a lot of selling at the bottom edge. It's almost like a gamma kind of concept, isn't it? It's almost like a gamma concept. They're going to have to get away from those buy trades into sell trades at a bottom edge. And that's going to create a thing called slippiness in the marketplace. And that's the slippiness you just got in the marketplace there for $1,000. That, you don't see it very often, but when you do see those trades, you should be very, very, very excited, because you're selling at the lower prices and you know you're going to make a big killing on this deal. Assuming, of course, that the sell value stays in play, because obviously if it goes back to bid immediately, then of course there's always a chance that swap dealers will just come straight back in and buy it back again. But if the value stays offered, you make sure you press that advantage, guys. Hammer that advantage. That is your day right there. That one trade is your day right there, outside of the big sell in the London session. That there is your day. That sell there, 77.50, 76.30s. That's your day right there for the afternoon session. Beautiful. And more than beautiful, called live in the room when I shouted it out for you to take advantage of it. Crazy. Could you have squeezed a small profit out of your bonds this morning using just the max signals of 4 ticks? Could you have squeezed your profit out of your max signals for 4 ticks today? Let's take a look and see if we could have squeezed out a profit of a few $100 here. And remember, the idea is we're aiming for a 4 tick profit, stops at break even, and immediately scratching if that's what happens, right? That's the basic rule set for this as a simple process. So we've not had that many, but let's take a look at the ones we had. They were all London session trades. And there's the timestamps. So I don't have to show the timestamps because you can see that I'm not going to make these timestamps up. You can see them. You can catch up with them yourself. We had the scalp short at 7.09, the buy at 7.49, the buy at 9.09, and the buy at 9.20. 4 trades, target of 4 ticks. And let's see if you could have made bank on those 4 trades. Let's just take a look. So the first short sell was at 7.09. 7.09, guys. The first short sell, 7.09. Let's take a look. 7.09 is this trade here, right? So there's your trade. Your target is 4 ticks. And your stops are at break even. So obviously, we don't know if you're going to be able to manage out these positions, because obviously it depends what else is happening in terms of your value narratives. But at least we've now seen what the trade is. And obviously, if you get the sell trade in there at 11s, it traded a low price ultimately of 24. So, I mean, realistically, 4 ticks wasn't a challenge, was it? 4 ticks was not a challenge. So let's agree that we certainly got a lot more than 4 ticks. That's okay. But 4 ticks on a little 2 lot, for argument's sake. First trade out at 4 ticks, the second trade out for, in this case, at least double, because it never scratches us. So we could probably argue that we got approximately, well, let's call it $350 approximately on that trade without any management, in case we try to understand this. $350 profit. So $100 on the first trade, $250 on the second trade, $350 profit on the first scalp. Okay, second scalp. Well, the second scalp was a troublesome one. The second scalp was the 749 buy trade. 749 buy trade. Let's take a look. 749 buy trade. Well, there's 749 right there. You see it? So 749 buy trade is at a price there of 0.3. Target price 0.7. So it hit the target price at 0.7. And a lot of people will complain, well, did you get filled and all that kind of stuff. So let's just argue that we never got filled, and we ended up scratching both of those two trades just to keep all the owners happy. So we got a 0 in that trade. I think they were fair enough. I think we're being fair on everybody there. A 0 in that trade. So $350, 2 contracts so far on your day. The next trade, of course, was the buy trade at 909. 909. Where's the buy trade at 909? So let's take a look. So 909. 909, 909 is this candle there. There's the 909 candle right there. So there's your buy trade. Oh, that doesn't look good. We had a 1-tick drawdown, guys. We're going to be in trouble with that one, aren't we? And yeah, you had a 1-tick drawdown. Yeah, okay. So we had a 1-tick drawdown there, 909. So obviously we're aiming for a target price of 3s. And we never got the target price of 3s. And obviously, before the target price came up, we actually had a new buy trade at 920. So let's take a look at the 920 buy trades. And there's 918, 919, 920. So there's another buy trade there. So at this stage, we could be simply just long 2, or we could be long 4. But, you know, they're both the same price. They're both going to have the same targets, etc. So whatever you want to do. So we've doubled down on the buy trade. And, of course, the target price is, of course, 0.3. Well, we get the 0.3 there with a 1-tick drawdown. So if we are doing, if we have taken this trade twice, we're now in 4 long positions. And of course, 4 long positions means that we've hit that target price. And obviously what happened since then is that we got this massive rip higher from that scalp trade, didn't we? I mean, that's a brilliant scalp there, isn't it? What do you think, guys? Is that not a brilliant scalp? So we could argue about what we got in terms of trade outcomes and all that kind of stuff. But worst case scenario, we got $700, right? Worst case scenario, we get $700 out of the 4 contracts. 4 contracts, mind. We're giving ourselves a terrible managed position here. $700 was child's play. So on a 2-lot entry process with a maximum drawdown of 1 tick, we've managed to clear $1,050 on the scalps. Would anybody be happy with that? It doesn't look anybody is happy with that. So we'll just move on to something else, and we'll look at what the gold market is doing with us at the moment. Bunch of bloody miseries. Okay, we got a beautiful flush to the top side on gold, and don't know if anybody saw it, but one of the things we recognize about flushes is it can be the end, but it can be the beginning of the end. What it is generally something, right? It's something. It doesn't mean that you are buying the top lines or selling the top lines. It just means that it's possibly something going on at that price. It might be the beginning of the end. It might be the end. It might be absolutely nothing. It might be an algorithmic driver. So you've always got to fit it into the rest of your stories. So if I was looking at flush trades today, for example, in the overnight session on gold, this is what we would have purely from the world of flush trades. Can anybody see the flush? There it is right there at 88s. So we don't know what it is. I mean, as I said, I'm not saying that that is a sell trade, but obviously when we see the flush coming in, you're obviously aware as soon as that candle closes that you've got a flush trade. You could, if you like the idea of selling it, well, you've now got your chance to get short almost immediately off 88s. It trades down to 82s. I mean, that's a $600 profit, guys, in 15 minutes. $600 in 15 minutes off of a flush. Let's take a look at the buy trade at the bottom edge here. So obviously we can see from this buy trade at the bottom edge, it was the beginning of the end. It wasn't the end, it was the beginning of the end. So when that candle closed, again, you can see that you got an easy profit. You can see that it went from a price of 69 halves up to a high price of 71s, $150 scratch out, but at least you're now aware that when you failed on the auction here, that this might be the beginning of an end, and you could draw an angle there and start thinking about that as a possible buy trade. And obviously what happened going forward was that flush was the buy trade, wasn't it? Look at that, guys. See the flush giving you that level? See the flush giving you the story, and see what happened to the trade outcome? It's an incredibly important piece of simple information, isn't it? Crazy important. So what about the sell flush that happened before it? Well, there it is there. I'll zoom right into it so you can see it. So it obviously started in here. You can see it for yourself. So obviously you can start marking off those levels. You can obviously start marking off that level and saying, right, I know we're in a flush. This is when we're coming into the flush area and leaving the flush area. So you're now looking at that saying, okay, I'm starting to watch this as a possible sell reversal. You may well have got it. You may well have been able to take advantage of it. But one thing you're definitely doing is you are noting that it's existing at that price level. Coming back into this could be a sell opportunity. Remember, we said to the left-hand side, you're going to be able to see where that is already established and maybe take advantage of that knowledge. And obviously what's happened to that level is that level actually became the capper price for the buy trade. Look, you see it? Became the capper price for your buy trade. Crazy, isn't it? And from that capper price, of course, became the breakout zone for the gold market at that stage. It gives you that quality about your structure that you maybe not seen before. It gives you that information about your structure that allows you to see where there has been a strong dose of potential manipulation. And if you've got a strong dose of manipulation, that's where you should see those flush trade opportunities. And obviously that's what you're looking for. I mean, a flush should genuinely contain a flush out of orders. And if you can flush out those orders, you buy orders at high prices, sell orders at low prices, you've got a real money shot at taking the trade. A real money shot at taking the trade. And that's exactly how you've been able to look at these as possible processes. So that's pretty good. That's pretty good.